SoFi stock is getting beaten down, closing below $18 on Friday, not making it into the S&P as analysts and expected predictions were hit. And we're seeing different pivots within the business that might not give clarity to the investors just yet. And we're going to discuss exactly why Wall Street is buying more SoFi secretly without you guys knowing it. So with that being said, let's jump into it and dive right in. So the first thing is, what is actually happening with Wall Street and why are they buying more of SoFi? So JP Morgan marks down the value loan of portfolios with some private creditor groups, such as Reuters source says. So basically what's happening is the private credit is in free fall right now. And this is a major warning and things that are affecting the banking industry as a whole. With SoFi being a fintech company in the banking industry, there's a few reasons, and this is a big one, why it didn't quite make the cut to join the S&P 500 in Q1 of 2026. So these are the predictions in Q1. Now, personally, I didn't think that SoFi would make it into the S&P in Q1 of 2026, and there's a few reasons why, which we'll discuss in just a second. There are some bigger companies, but there was some very strong and millions of people that wanted SoFi to join in the first quarter of 2026. So as you can see, there was 54.4% chance here of it joining. You can see here, obviously some companies down here, pharmaceutical, pure storage, those had way less of a chance. But instead of SoFi joining in 2026 into the S&P 500, there's some other companies that joined instead. So Vertiv Holdings, so this is an industrial sector, so data center, AI infrastructure, obviously with the AI revolution happening right now, very, very good that we have good companies joining. As you can see, the cap is around 100 to 103 billion. There is Lumentum Holdings, so LITE, so light information technology sector. This is approximate market cap of around 44 to 46 billion. We have Coherent, so ticker symbol COHR. So this is an information technology sector. The cap is between 46 to 48 billion. And then EchoStar Communication Services. So you can see that instead of SoFi, these four companies were added to the S&P instead of it. Now, does this mean that SoFi is a terrible company that's going to crash the ground? Absolutely not. I think it's getting beaten down. And there's a reason for it, and we'll get into it. But with these companies, now that these four companies are in the S&P, that just means there's four less spots ahead of them that SoFi is going to get in. So this is a big piece. When there is fear factored into these stocks, most times it's factored in at a very aggressive fear level. The price action around 4, 5, 6 months ago, you can see that $25 to $28, there was a lot of expectations that SoFi would join the S&P, and that was baked in to that price. Now that we're seeing, obviously, SoFi not joining in Q1, we're seeing a lot of that price retract because of the fear aspect. So as you can see, this is a tweet here from Crossroads, so Crossroads on X or Truth Social. So SoFi didn't get into the S&P 500 this quarter, but the odds of them getting in included this year just went up. As I just said, because of those four other companies joining, just means less competition for SoFi to get in. Why? Vert got in. So Vertiv is the first company to enter the S&P after having entered the public market as a SPAC. I believe SoFi will be the second. It's just a matter of time. SoFi did enter the market as a SPAC as well, which is good news because Vertiv just got added and they were a SPAC as well. So what are the key factors on why I think SoFi is going to be added to the S&P pretty shortly? And obviously, when we get a company added to the S&P, we get a natural boost in the company's valuation because there are millions and millions of dollars every single month that get added into the company's valuation artificially. And what I mean by this is when someone gets paid, let's say you get paid $5,000 a month and you have auto investments of $500 investing into your retirement accounts that invest into the S&P, so the overall market of the top 500 companies. With SoFi being one of those companies within that basket of 500, it's artificially boosting up the company every single month. And we saw this happening with Palantir earlier last year as well when it got added in the S&P. Huge run up. But what are the new pivots that SoFi is making? And these are incredibly important. So SoFi is making a commercial move. What this means is SoFi is expanding to commercial banking and financial infrastructure by launching SoFi USD, a fully reserved US dollar stablecoin aimed at enterprises, fintechs, and other banks. It provides 24/7 high-speed, low-cost settlement for the B2B transfers, so specifically business transfers, and digital asset transactions. The initiative leverages SoFi's bank charter and Galileo's tech platform to bridge traditional finance with on-chain technology. So this is huge. SoFi traditionally went over in the past towards like consumer loans, more the consumer banking side, and they did great. And we'll go through the traffic in a second, how it's consistently going up, which is great news. The cool thing about the commercial sector is commercial and institutions move tons of money, tons and tons. Think of when a business gets sold for 5-6 billion. Think of when transfers happen between, let's just pick any other bank in the US and they get transferred to SoFi and they get that transaction fee. And when they're managing investments that are 2% of a $500 million portfolio of a company's. Okay, these are massive, massive numbers. These aren't just a millionaire status of a normal citizen, a normal user. Okay, so SoFi's USD stablecoin is at the forefront of this. So it launched in December of 2025. This asset is fully backed one-on-one by cash and managed by SoFi Bank. So providing regulatory security on-chain transactions is huge as well, because that's a big factor that people are scared of with all these coins is, well, what happens if I lose my money? With it being backed by SoFi, you get the speed, low cost of transaction, and the backing by a great institution. Commercial use cases, this product aims to solve slow settlement for business, offering programmable treasury applications and instant payment settlements, which is great. That essentially means that it's like e-transfer, Cash App, Venmo, things that when you send $20 to a friend, you instantly get that cash in your account. And it's very similar to this. Imagine saying, yeah, I'll send you a wire, but I'll send it through SoFi USD stablecoin and it'll get to you in like 10 seconds. You're like, well, you're transferring $200 million. And they're like, yeah, we'll send it. It'll take like 10 seconds. Guys, that's huge. That's huge for the business world. Partnerships with Mastercard is also another big one. Mastercard is partnering with SoFi to enable SoFi USD settlement across its global networks, adding in cross-border remittances and B2B transfers. Infrastructure for others. So SoFi is positioning itself as a key technology partner, allowing other fintech and banks to use its white label stablecoin infrastructure, which is even bigger as well. SoFi provides commercial payment services and sponsors banking, facilitating lending, card issuing, and risk management for business clients, which essentially just means it's adding on all of the different services for businesses and using the stablecoin as the crutch that differentiates them in a market. So with Mastercard, this is a big connection here. Digital assets are entering a new phase, and this is Mastercard statement. It once ran into parallel to existing financial systems is increasingly being applied to solve practical real-world needs. Today, we introduced the Mastercard Crypto Partner Program, a global initiative that brings together more than 85 crypto native companies, payment providers, and financial institutions. Together, we're creating a forum for meaningful dialogue and collaboration as the space continues to mature, which is huge. Everybody knows Mastercard. And when you're pairing these two together and you look at the valuation of the stock, you're like, this is fantastic news. Why is this stock getting beaten down? Which leads me to believe it's a great buying opportunity. And here's a big reason why. These are the monthly traffic visits. Okay, so traffic per month, so clicks per month in the millions, or excuse me, not the millions, in the hundreds of thousands. Okay, so these numbers, this is 700,000, 630,000, etc. As you can see, it's slowly trending upwards, which is a great sign. So this is since the beginning of 2025 up until today. Because February has a few less days, you can see that obviously is a little bit less traffic. But if we look at the traffic per day, it's still trending upwards, which is amazing. You can see that they pretty much skipped the 800,000 clicks per month range, and they're up at 920,000, 900,000. But let's look at the quarterlies. So this is even better news as well. So quarterly, you can see it started and it's going up, just slowly trending upwards all the way up to that. So another great news. So we have currently great news stacking on top of each other. So what the heck is going on here? The price targets is another key thing to look at. Oftentimes when there's lots of fear in stocks, the price targets will change. And what we've seen with SoFi is they actually haven't changed a single amount. The highest price target is priced in at around $38. So that would be obviously great. Right now it's at $18. If you invest 10 grand, you can see a doubling of your money pretty quick. The average target price is 27. So right now it closed on Friday at 1770. Let's just check here for a sec. Yeah, 1770. Okay. So with it going back up to this support level here in the high 20s to low 30s, I mean, we're seeing a doubly. I lost my train of thought there. I got a text, but we're seeing a good possibility to put your money in there and see a doubling of your money which is what I'm investing in right now. I'm buying a ton of SoFi shares and I am investing heavily into this company because I believe that it's a great buying opportunity. And then the SoFi 2026 rate cut assumption. So we have to discuss this. So in line with market expectations, our 2026 assumptions are as follows. An interest rate outlook, so consistent with the Fed funds, futures, and 2 rate cuts to get us to 3 to 3.5% exit rate in 2026. This is pretty big. The Fed rate, I don't think there's going to be a rate cut over the next 2 months, but potentially beginning of summer, May, June, potentially July as well. And the reason why is when we see lower job reports, which we've just seen, there was 92,000 jobs lost over the labor markets in February, we tend to see more of a push towards interest rate cuts because that lowers interest rates. It basically artificially boosts the economy with more spending power, less money spent towards, et cetera. I think this will help SoFi as well because they get transaction fees, they get boost from investments. So people want to invest more of their money. They get more transaction fees there, management fees, as well as just overall people clicking on the website, getting used to the service, and investing more. This will also help businesses as well. As businesses have more spending power, they look to obviously keep cutting costs, but also have more to be able to reinvest in their company and the economy. So that's going to help on their business side as well, which they're launching. So in general, I mean, I'm super stoked for SoFi. I think we could see more of a bottoming out, like Tom Lee said, if you haven't watched that video yesterday. But as you can see, it's really gone down here and it's getting hammered. Like I'm not sugarcoating it. It's definitely getting hammered. You can see that back in July of 2025, it was at a similar price target around $18. High $17. And I think as long as we develop a nice support line, I think we can see a nice run up towards the $25, $27 range. And as you can see, we're seeing a lot of consolidation here, especially at that $18 mark. So I wouldn't be surprised if people jumped in, did a couple swing trades. We're seeing a lot of shorting on the company right now. So as we get a short squeeze, it could push a lot of those shorts out and force them to obviously buy the stock, all that good stuff. So those are my thoughts on SoFi. If you guys enjoyed this video, make sure to click the subscribe button. I really want to bring the most up-to-date information for you guys, and it would really appreciate it if you could go down there, leave a like, let me know what you think of SoFi, and subscribe. But with that being said, we'll see you guys next time. Peace.